Food for thought on when to have confidence in buying this dip. I'm going to start this video off on describing this black triangle of last line of support is already being hit before S&P 500 has hit its downside target. S&P 500 in the stock market can't bounce until it hits the daily 89, and it's not even halfway down there, and Bitcoin's already here. That's not looking good. But after I show you why that is, I'm going to end this video, so stay tuned till the end. I'm going to give you a 3-stage strategy on when to have decent confidence, better confidence, and good confidence that you are buying near a low before another potential rip up, whether that rip up is a lower high or off to the races. But I'm going to show you a 3-stage confidence builder on buying a dip that you can apply to any altcoin. You're going to like it, so stay tuned. Let's go get some Bitcoin. This black triangle and this horizontal is Bitcoin's last line of support. I have it clearly labeled, so I don't have to talk about all the levels. I've had this black triangle on here for quite some time. I've mentioned it in multiple of my videos. I do, in general, expect a bounce here. However, I thought Bitcoin, during that time of talking about this black triangle, I thought Bitcoin was going to not underperform the stock market so horribly, and that it would be here as S&P 500 was at its daily 89 way down here. It's just at its daily 10. Look at this. It hasn't even started yet. So it's not looking good. I mean, it does not look super confident to buy this dip from an investor or like swing trade / spot trade standpoint. It's not looking very hot right now. It's looking like it's not good at all. However, Bitcoin could begin to be a flight to safety, and the altcoins will start selling off and people buy into Bitcoin. Bitcoin dominance starts racing up. I suspect it probably will, but that won't still be enough to hold Bitcoin up in this black triangle while S&P 500, the stock market, go down to their daily 89s on the indices. It's not looking good. So that's the first piece of evidence I wanted to show you. Where will Bitcoin go? Well, there's a gap down here at about 18,400. And so the Bitcoin could head down there over a weekend, but if it does, it will stay down there until Sunday at 8 p.m. New York time, which is roughly 1 a.m. Berlin time or midnight Great Britain time. It would stay down there until so that the gap could fill when CMEs open. 18, so that's way down here. Just remember 18.4. That's where it'll go if it breaks. And so I have a target of roughly $18,400 for Bitcoin. Should Bitcoin fall below this as traditional markets are going down towards the daily 89? And honestly, I think it's highly probable at this time. Could we get a nice higher low on Bitcoin somewhere from the breakdown point, like 23,100, 23,200 up here from where it broke down? Yeah, maybe. But Bitcoin's been underperforming. I doubt its lower high is from it goes up to its breakout point. Maybe Ethereum goes up to its breakout point, but I wouldn't be surprised if Bitcoin on its higher or on its lower high, I mean, it can't get above this level here. I would not be surprised at all in the least. Turn that down. And so that's what we got for here. Now, when do we start getting the confidence boosters of buying the dip? A 3-stage process. It's going to be super, super simple. Let me show you that right now. All right. Throw on your 200 EMA of whatever time frame. Just make sure your 200 EMA is on for the time frame that you're on in your chart, okay? I'm going to take this snippet. I'm going to actually take off the micro channel. And I'm going to show you an example using this right here. When could you have been a 3-stage process being confident to buy into that rally having bought this dip, okay? All right, watch. I'm going to go to the 5-minute chart, and I'm going to use the 200 EMA on 3 different time frames for a 3-stage confidence builder of I am buying into a rally that could go a little higher. Watch. 200 EMA. When did price get above it and use it as support? Boom. That's confidence. That is where you have mild or cautious confidence. Okay, a cautious amount of confidence got above the five. So let's zoom way in there. Got above the orange line, which is the 5-minute 200 EMA, bounced on it. So at this level right here, once you got over this local high after a bounce, at this point right here, so let's just call it this point, you would have had confidence that this was a local low, but not until then. Step one. How much of the rally did you lose from the wick low? 3.5%. But you have the confidence that it's going to generally march up from there. Cautious level of confidence. Stage number 2, go to the 15-minute chart. When did Bitcoin do roughly the same thing? It looked like it wanted to here, but it did not break any local high, similar to how I showed you back here. So it failed it. But let's just assume that it got back above. At this point, once it got right here and broke above this, that is your step 2. So this one was a little sloppy. It did not use this line perfectly. So you wouldn't have had that stage 2 confidence until a local high was broken after this was tried to use as support. Okay? So that's stage 2 of confidence of, hey, this is a local low. We're up from here for, a certain time frame. Stage 3 is 1 hour. Same concept. When did Bitcoin get above the orange line on the 1 hour and use it as support? Here. And so in this case, during this whole rally up, starting in July 13, it went up from the point that you had the 3rd stage confidence. Bitcoin still went up freaking 20%. Did you catch the absolute low? No. So if from the absolute low to where you had strong confidence, you lost 7 1/3% of the move, but who cares? You now have the confidence that it's going to go up for a certain time frame. Does that make sense? And so you can apply the same logic with this dip down here. And the reason why this is, okay, are you seeing why I'm mentioning this in light of this triangle already being hit before S&P 500 has hit its daily 89? Like, I would not be super confident in a bounce here. And so I wanted to show you a strategy that is it's in addition to my nice levels structural analysis that I have here. EMAs are pretty powerful, and it's going to be an extra layer of trying to essentially temper your expectations of how strong this move might come, or how strong this move might be after this bounce. But the whole key is we have a huge warning sign here that final support. Okay, so line in the sand support is already hit, as S&P 500 hasn't even gone halfway down to where it's inevitably going to go with an extremely high percentage chance, because it has a 100% hit rate of hitting the daily 89 after a strong rally like this in a bear market, 100% hit rate since the 1970s. It's extremely likely to happen. And it's not even halfway there, and Bitcoin's already here. When I drew this black triangle, I thought that it was going to be in line with the daily 89 being hit in S&P 500, but it's already here. It's already here. So don't have strong confidence in a nice strong bounce until you use that 3-stage process that I just showed you. And using that on Bitcoin, that could help you. Let's say you trade BPRO or Trias or whatever. Using that on Bitcoin will help you have more confidence on those spot trades from more of a swing trade or spot trade or investor standpoint when to buy this dip. I really hope this was helpful and you just got chimified worldwide. Peace.